Welcome to the FarrCast, bringing you insights into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the first day of August. Can you believe it, ladies and gentlemen? The second month of the third quarter here. We have a vice presidential candidate in J.D. Vance for the Republican side. I think in the next day or so, I think it's going to happen very quickly here. From what I'm hearing in D.C., we're going to know the Democratic running mate for Vice President Kamala Harris, and then they get the convention, and then we'll see. Can't wait to talk politics here later in the FarrCast. I also did a special broadcast with Stephanie Link for Hightower, talking about this and what's going on in politics and who might do what. Kelly and Shapiro are the two primary guys. Kelly from Arizona, and then Shapiro, of course, the governor of Pennsylvania. I keep saying you need to have Pennsylvania. You got to have Pennsylvania. And folks are pushing back on me. Hey, Kelly's in Arizona. He covers a lot of the border issue and makes things better on that primary issue for her. And I keep coming back on, I don't care what he covers if you don't win Pennsylvania. So I'm sticking with my Pennsylvania bet, folks. And as you've heard over the years, I can be dead wrong. We've seen markets bounce back. The big anticipation for the Fed yesterday. Jay Powell's going to come out and tell us that we're going to have a rate cut in September. He did not say that. He did not say that. He said the same thing that he said at the previous meeting, which is, yeah, it could happen, and there are reasons that we could, and we're going to watch the data, blah, blah, blah. But he was not as bullish as the headlines in the press want to tell you that he was, or that the market's reaction was. We've seen this over and over, where the markets come up with their own narrative that the Fed's going to do something dramatic that the Fed never says, and the Fed comes back sooner or later and disappoints markets and says, actually, we never said that. This is what we said, and then this is what we're going to do. So have to see. We've got Jim Iuorio in our first block this morning in our first segment. I want to hear what he thinks and what he heard from Powell yesterday. I can tell you one thing that he's going to tell you. He's going to tell you that the 10-year Treasury a week ago was trading at a 424, and it's now a 405. That's one thing that every pro in this business is watching, and that's got our full attention. That means there's a big rally. Those interest rates have come down. Is it a flight to safety, or is it an anticipation of lower rates? The short end hasn't come down. The short end of the curve is still in that 530 range for the 2 and 3 month bill, because that's where the Fed has kept rates. But you know, the curve that had kind of gotten very flat, still looking kind of getting a little steeper, actually, again there, that gap. So we're watching all of these things. We're waiting with bated breath about these inflation reports. Things are heating up in the Middle East. Earnings are coming in fine. But as some of the earnings are lowering their forecasts, or saying, okay, we're going to pull it in a little bit and we're not going to be quite as aggressive for the balance of the year, everything for 2025 is still a great deal higher. Want to see what Iuorio thinks about that too. So gold still high, inflation a bit of a problem there. The dollar's still strong. Earnings are coming in okay, and stocks continue to do great. The economy, folks, is healthy, except for all this damn debt we're adding. Jim Iuorio is a managing director and partner at TJM Institutional Services, the voice of the Chicago Exchange, the floor, the man, and my great buddy. Welcome back to the FarrCast, Jim.
That's a hell of an intro, Michael. Thank you. I appreciate that very much.
Well, and don't forget Branson, Palestine. I mean, if you wanted the best burger in the world, Jimmy happens to own that one too. You got to go. You get a discount when you mention the FarrCast. We'll figure out how much if somebody actually goes and does it. It's happened once. I know it's happened once.
It has. Yeah.
Jim, you heard my intro. What do you think about Powell? What do you think about the price of stocks? Let's start there. Let's go with Powell first. What do you think? What did you hear?
So here's what I think the market thought. I heard what you heard, which he said he's not promising anything. He's never promised September. But I think the market said, well, yeah, that's exactly what you would say if you thought you were going to cut in September, but you didn't want to tip your hand now because he didn't want to get himself the criticism of someone saying, well, if you're going to cut in September, why wouldn't you just not cut now? The labor market, we see the labor market. We're recording this on the first. Labor market comes out the second. So if you're watching this, we see the numbers tomorrow. I actually think they're going to be weak because they've been weak in the past and they've just been kind of dressed up by this headline number, which is second and third job side hustles and full-time jobs are creating. I think that that's going to show that now. Now, you mentioned the 10-year, which I think is really fascinating. I think the majority of the move in the 10-year is that people think inflation is going away. And I think it's because they think the economy is softening, and we're going to see that in the labor market. That being said, now stocks. I don't think the correction or whatever kind of phase you want to call this weakness in S&P and NASDAQ is over. It certainly might be in the Russell. The Russell is looking way better than either of those two indexes in the short term. But I think that the S&P and the NASDAQ still have to prove it a little to me on the upside for me to think the pullback is over.
Okay, so you just uncorked a lot there. So first of all, Jay Powell, you think could still be on course for this cut perhaps in September? I think it could happen, but I don't think I'll still say it's 70% chance it could happen. I never give you a 100% chance of anything. And I can't tell the complication of the political season which way that's going to push him. Here we are 2 months before an election. The Fed hates to look like they're doing anything. If he's got Trump raising hell, if he's got Kamala Harris raising hell, pushing both sides, is he better just to sit on his hands? I don't know. But let's go for a second to the labor market now. I've been saying that the labor market is normalizing. We went from this huge imbalance with the JOLT numbers, right, where we had all of these job openings and a very small workforce. It's about 1.2 right now, 1.2 job openings for folks who are out there looking for jobs. Very normal, and it's normalizing. Now, will the pendulum swim back, do you think? Do you think that's going to be the source, Jim, of, I guess, the slowdown that the Fed's looking for? What's the most important number the Fed's looking for?
So the labor number is going to be one of the most important things. Now, I think the discussion isn't the amount of jobs that we've created, but the quality of jobs. Now, if you look at it and you look at the amount of government jobs that have been created, like look at a state like Illinois, and I'm sure there's about 6 other states that are the same thing. Private sector jobs over the last year and a half have declined. Government jobs have increased more than the decline, so they can present a net pickup of jobs over the last year and a half. But to me, that is wholly unsustainable. Part of that is the federal spending that's just been unbelievable. To me, we just went over $35 trillion. We're accruing $1 trillion of debt every 90 days now. And the debt service has become above the defense budget. I think the third biggest line item in the federal budget. So this, to me, there's nothing good about the jobs market. And I've been arguing with this, but again, here, the Jason Furmans, the people who are left, and again, I don't think an economist should have a side, but when they look you in the eye and say, look at that job number, it's great, Stephen Renner, and then they don't mention the $35 trillion and the amount of debt we're accruing to try to boost GDP and the jobs data, amen, they're not saying it correctly. I'm not saying everything. And by the way, I thought things were going to collapse long before this, and I thought the Treasury was going to take every penny they had in the Treasury general account that they had with the Fed and use it to boost up asset prices. They did not, to their credit. So a lot of the things, the nefarious things I thought was going to happen did not. The economy is a little stronger. I thought it would fall apart by now, but I still think there is a lot of holes behind the wallpaper.
Yeah, holes behind the wallpaper. I like that. I think if what Jay Powell has to figure out is where we are in this economic cycle. Because let me just be really simple, pedantic, if I may, for 1 second, ladies and gentlemen. If you have a shoe factory during a good economy, everybody's buying your shoes and you're buying a bunch of leather and you're hiring a bunch of workers. And then all of a sudden, the jobs kind of start to trickle out because everybody's got shoes. Everybody's bought their 6 pairs of shoes because they were flush with cash, and they kind of stop buying shoes. And all of a sudden, your leather starts backing up, and you fire a few people because you don't need to make as many shoes, and then you don't need to buy as much leather, and you stop spending. And then all of a sudden, those people who've lost their jobs, they stop spending, and you have to wait. You have to wait till it contracts, and all of a sudden, people finally look up and say, damn, I've got holes in every pair of shoes I have. I got to go buy some shoes. And then all of a sudden, the demand returns. So Right now, we're watching this part of the cycle with the consumer to see if they still have cash. We saw the report from McDonald's, right? The McDonald's report said that consumers aren't coming in, the customers aren't coming in to the extent that they were. They're not spending as much money when they do come in. Is that a result that McDonald's made stuff too expensive in McDonald's and tried to get out in front of inflation, and they got to that point of price elasticity, and they're now backing off from it? Maybe, maybe. But what we're watching in the U.S. is always the consumer and how the consumer is spending. This is big. I'm going to move to stocks now, Jim. If we look at these magnificent 6 or 7 stocks that have been driving everything for the past 2 years, it does seem like there's been a shift back. There's been a shift and a crack in those. We've seen them pull back. We've got Microsoft down 15%, and a number of the others that have come down rally the past couple of days, but a broadening of stocks. Money has gone elsewhere, and a lot of really good companies with good balance sheets have started to move. Is the market as healthy? Will this continue, or should this be the opportunity that you jump back in as hard as you can to this little bit of a weakness in these magnificent 6 or 7? Because that's still the ride, that's still the train that's going to, the locomotive that's going to drag the train from here on out.
I heard someone describe the rest of the S&P as the inglorious 496, 94, which I thought was very, very funny.
That's right.
So we got, when we look at this move from the big 6 into the Russell, go back to July 11th when it began, when we had the better than expected CPI report. So that started the move. Now for 18 months, there had been large funds that were short the Russell, long the big 6. So when that move starts to unwind, the fundamental story changes, but then more importantly, positioning happens where people have to buy the Russell and they have to sell the NASDAQ to get out of their positions when they get margin calls. So then the next leg of that move, you have to ask yourself, is the fundamental picture still favorable to the small caps over the big 6? And I think the answer to that is yes, depending on a couple things. We have to believe, and we'll know more over the next 2 weeks when we see unemployment and then PPI and CPI, I believe the 12th and 13th or 13th and 14th. But anyway, when we see those things and we believe that rates are going to stay low, small caps need rates to stay low. There's no question that the market positioning thing was there too. The small caps also wanted to believe that Donald Trump was going to become president. I have no political horse in the race. I like to think about policy, not politics. But I do think the market thought that there'd be less of a regulatory structure if the Republican administration took over when we're changing the calendar. So I think that small caps need those things, but I think they'll get them too.
When you look at either agenda for the Democrats or the Republicans, you can invest according to that agenda. You tell investors, look, you're going to get a Republican agenda with less regulation and, more energy, more drilling, more whatever you get. They're going to leave the banks and big business alone and all of the other stuff that happens. You might get tariffs on this. And an investor that goes through that meticulously, writes it down on the yellow pad. That tells you how old I am because I still do that. Because I like to look at stuff that way. That's how I look at stuff and get it in my head. And so I look at it and say, all right, then this is what I need to do business-wise. That trade had begun to shift towards the Republican agenda. I think it's shifted back to at least a neutral point now, and we'll have to see if Vice President Harris and her pick can keep up the momentum that they have. This seems to me to be an election. Now, I had one of my Washington insiders say that she's completely on script. She's completely on the teleprompter. They're keeping her away from press conferences, anything where she'd be, off the top of her head. She's not very good at that. And so they say this is the highest profile in the basement campaign the Democrats have ever run, which I thought was perfect. But I think it's also brilliant. And I don't think she should be baited out into the public. I think and when Trump was actually on script after the assassination attempt, and he was on script for a week, he seemed better and said more reasonable things. This off the cuff stuff for the president, role of the president, at least with these candidates, doesn't seem to be working for him that much. If I had to ask you, Jim, the real effect of this election, and we'll go after this, the real effect of the presidential election over the next 4 years or 5 years on your portfolio, how much will it really matter?
I think it will matter a little bit because I think if you get both candidates seem relatively inflationary to me. I think Donald Trump spends money. He spends money too much. I think he is better to reduce regulation or at least creates some optimism in small business. And we can go back on the chart and show you how that's happened in the past. I think if the Democrats win, okay, so you have to ask yourself the question, are the Democrats really as tied into the big six tech companies as the markets sometimes believe they are? I think the answer to that is yes, but I think the second part of that question is more important. The market thinks that the Democrats give special favors to big tech. We saw things like from Google. There were some questions about their search engine and what it shows when you search Donald Trump things. So I think it's reasonable to make the assumption that big tech will do better because they are more blessed by the Democrats. Is that a controversial thing to say or no?
Well, sure, it's a controversial thing to say, but it also could be very correct things to say.
Right.
But let's say too that the big tech are so insulated and so powerful that they're kind of insulated from the Republicans too. And basically, they're getting so big that the politicians can't piss off these people. They've got too damn much cash, too much power, and you can see what happens if Twitter bans any one of them. And their influence. There's a lot of power here. The one thing I said yesterday when I talked to Stephanie Link, Jim, and I'll get your final take on this if you would. For all of the politics, the most important thing that any investor needs to pay attention to right now is that the Federal Reserve is pivoting its policy. We are moving from a restrictive policy to an accommodative policy, and these moves are turning the big tankers out in the ocean. They happen slowly. And this is a tailwind no matter what they do with debt. If they create a lot more debt, that's still good for markets as that's happening in the near term. It's a lot more cash, a lot more demand, a lot lower interest rates, so that the Fed is changing from putting the foot on the brake to the foot on the gas at least, or taking its foot off the brake. That's the biggest deal that markets need to pay attention to. And instead of figuring out what your Trump trade's going to look like, or your Kamala Harris trade's going to look like, figure out what your Fed trade's going to look like. That's going to make you most money, according to Farr. What do you think, Jim?
I actually agree with that 100%. And by the way, my recent bearishness of the stocks that started back probably around July 11th was more predicated on the movement from neutral to pivoting for the Fed. Everything is the Fed, like you say. In the long term, I think both candidates are profligate spenders, which could hurt the dollar. And I think you almost need to be in stocks to hedge yourself from big spending government. So I think the stock market is going to do fine after whatever we're going through now is done. And I think the technicals will lead us the way out of that. But right now, it doesn't seem like it's done. But I think that thesis is spot on. The Fed is still the most important thing.
Jim Iuorio's the partner at TJM Institutional Services, the voice of the Chicago Exchange, the proud proprietor at Brandt's. If you want the best burger in the city of Chicago, get your ass out to Brandt's. I'm telling you, this is what you need to do. Jim, thanks.
Thank you, Michael.
We're going to be right back, ladies and gentlemen. Dan Mahaffee. It's the Chicago Show. Stay with us.
Thank you for joining us this week on the FarrCast. Now it's time for political analyst Dan Mahaffee and your host, Michael Farr.
Welcome back here for the Chicago Show. I'm calling it the Chicago Show this week, ladies and gentlemen, because we start with Jim Iuorio, of course, from the floor of the Chicago Exchange. Then we go to Mahaffee, who's also in Chicago now, vice chairman of the Dr. Scholl Foundation. He is a fellow for the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank, and the senior political analyst here on the FarrCast. And then finally, our great friend Jack Bouroudjian from Chicago in segment 3. Can't wait to talk to Jack. What a dear friend and what a smart guy. Dan Mahaffee's with us. Welcome back, Dan. Glad to see you and glad you're recovering from your COVID. That stuff is no fun.
Yeah. Thank you, Michael. Great to be talking with you again. And yes, feeling better. Thank you.
I'm glad you're feeling better. The taste buds are returning?
Not quite there, but hopefully by the summer barbecue season.
Yeah, okay, well, we'll get to that, and certainly we need that. You're going to run out of summer here very quickly in Chicago. They've got, only 2 seasons in Chicago. They've got August and winter, so it's coming. You got to eat that.
Well, winter's not coming yet because I still see the orange cones on the road.
Perfect. And that's how we tell. All right, we have seen J.D. Vance on the Republican side perhaps have Republicans questioning whether that was the right pick. They seem to have some buyer's remorse. It looks like Vice President Harris will make her pick perhaps in the next couple of days before the convention. Is conventional wisdom, is what I'm hearing in Washington. What do you think about that? Let's start with, do you think we're going to hear this pick? And I'm looking at Shapiro and Kelly, so you tell me what you think.
Mhm. I think we are going to hear this pick before the convention just to keep that momentum going. You think of it even in just controlling the press narrative that you roll out the VP, you have that bump, you take that into the convention, you keep this momentum they have going. And a lot of commentators are acknowledging that there's a Harris honeymoon going on right now in some ways. The momentum behind her, what we've seen in the polling, where young voters are returning to the fold. It appears that the doubts they had about Biden, the questions they had about even participating in the election are being reframed. The celebrity endorsements have certainly not hurt in that aspect. But then behind the scenes, you see the fundraising numbers really taking away whatever advantage the Republicans felt they had coming out of the convention. So I think you continue that. And you are right that it is Shapiro and Kelly who are they looking at the most closely. I think it's an interesting lineup. I think, though, if I had to put my money on what would be the best pick, I think it would be Kelly to simply allow Shapiro to continue to be there in Pennsylvania, the governance of that state during that process. And Kelly's resume, when you think about your average voter, astronaut does really well in capturing that voter's attention in terms of a resume.
You know, he was a naval fighter pilot too, and flew in combat missions before
Correct.
he became an astronaut. So was a member of the military for a Navy fighter pilot.
Covers the national security argument, comes from a border state, and Arizona is going to be one that's just as important as Pennsylvania, and if not, even a closer contest than Pennsylvania could be in some aspects.
Been a senator since 2020. But Gabby Giffords, of course, husband. You know, so I've been reading about him. I still think one of the coolest things is he has an identical twin brother who was also an astronaut. The only two siblings in space. But imagine for NASA to be able to really take a look scientifically at the physical reactions of genetically identical twins going into space. I mean, I've never read anything about
his
whatever
story is
test
the Tom Wolfe sequel. It's the Right Stuff 2 type of story. So
yeah.
Look, I think that'd be very positive for them to continue with that, and I think it's a juxtaposition. We've looked at, we talked about Andy Bashir. Senator Kelly would understand this. Bashir seems now to be a heat-seeking missile following J.D. Vance. The campaign has decided that he's probably not, if he's not going to be vice president, just use him as an attack dog on J.D. Vance and the hillbilly elegy mythos that he put together.
Dude, what I've just said, though, and I've said it a couple of times, I just finished saying it to Iuorio, I'm still not over Shapiro. I get what this guy, Kelly, brings to the campaign. I get what he brings to the ticket. But if you don't win Pennsylvania, you don't win. And she's got to get Pennsylvania. And it's dicey. So I can, if you say, well, Shapiro can maybe still bring Pennsylvania in that leadership role, couldn't Kelly still bring Arizona and get
all fair points, points, though. I think the one thing where Kelly and the national security resume helps is with that Haley primary voter that they need to get a few of those off at the margins. That Haley Republican who's now looking at, kicking the tires on voting for Kamala and they tend to consider national security, geopolitics, very important issues.
Okay. Well, we will watch that. So your pick here is Kelly.
That would be Mahaffee's pick, yes.
Just to keep it interesting, Farr's going to go with Shapiro. Though you've got to, when you look at Mark Kelly's bio and what he's done for this country, and I don't care whether he's a Republican or a Democrat or an independent or a Tory, they're all fine by me. Given what the guy's done, you stand up when the man walks in the room. He's given a lot to our country. Okay, so the right-wing media has been losing their minds over Vice President Harris and the way she has stayed on the teleprompter, that she hasn't gone off the cuff, not off the top of her head. They're keeping her out of interviews. She did not do the Association of Black Journalists interview that Trump did. And boy, doesn't he wish he hadn't done that one. God almighty, Mr. President, how did you do that? How do you step into an association of black journalists? You know what you're getting into. Your people have tried to prep you, and then you just put your foot in it? Like, come on, Mr. President. Dan, what did you make of any of well, let's go. I've just hit you with two big ones. What do you think about Harris staying on the teleprompter? Because I think it's working for her big time. One of my friends in Washington said this is the most high profile in the basement campaign we've ever seen. They're keeping her away from everything, and yet they've got her at high profile. And it's working. Why would they change it?
Right. Why would they change that? And I think we also need to remind ourselves, for the first time since 2016, we are seeing a normal political campaign being run by a conventional politician with a conventional political team. Well, you think about that with Biden and Trump during the pandemic, and Trump has certainly never run a conventional on message, stay on prompter.
No, wait, he did. He did for about 10 days after the assassination attempt. He actually.
But you're actually seeing Harris, someone who is a traditional, conventional politician, for all intents and purposes, running a traditional, normal political campaign. And that involves the modern political campaigns are won by staying on the points on your teleprompter, by staying engaged in that way, by continuing to be on message. And I think that's where the Harris campaign now, having moved away from really the biggest issue on the Biden side was his age, and you didn't have his ability. He couldn't stay on message. He couldn't stay on point. Physically, mentally, he wasn't there and able to do that. Now Harris can, and is painting a contrast, and this is how the campaign wants to frame it, of them being the normalcy option compared to what you see in contrast.
Okay, is this going to work, and can they stick with it, or is she going to be baited to a microphone?
I think it becomes reset when they do their first debate. And that's where we see, again, that Trump has shied away from that there was the agreement. Now he's pulled back from that. But when they do sit down for a debate, I think that's going to be an interesting thing, because if you have one version of this is that's on message prosecutor Kamala Harris versus former President Trump that we saw at the NABJ, that resets this campaign as much as the first debate did. If Trump can reset, focus on the policies, focus on where people do have doubts about Vice President Harris, about immigration, about her record on border security, about some of the policies she had when she was in California, what the Biden administration has done on the economy. All those are areas where they can hit her. But if they continue to be tempted into the race questions, the other ones where, look, these get them attention in the right-wing media and in right-wing Twitter, but they're not going to get the voters in Maricopa County and Bucks County and Cobb County and the places where this election will be decided.
Okay. Well, so you think, just to paraphrase, the Harris campaign's on track, probably doing a good job with the campaign, and you could always say morning, noon, and night the Trump campaign could use some reining in. Or if they just keep it up, are they actually appealing to the Trump base, the Trump voters, and can they continue to attract new people? Or are they just talking to their own dogs and cats?
I think they're talking to their own dogs and cats, and that's where you have these numbers that seem to peak around 41, 45%. Even at its best, when Biden was weakest, it was Trump 47, Biden 43. A fortnight later, we're looking at these swing state polls. Trump 47, now Harris 47, 48. Trump's number, if it is maxing out, and again, people say polls. Don't use polls to predict the actual ending of the election, but use them to understand where the momentum is and how opinion is shifting. And what you see there is that in these swing states where Trump was hitting a high watermark, He's not going past that. And Harris is now matching that, or in some areas, opening an narrow lead.
Okay. Got it. As you look at what's going on, I'm going to do a big shift now because we'll watch all of this. We'll watch and see who she picks, and we'll see what happens with the convention. You said something earlier, and I don't think you said it while we were broadcasting, while we were recording. You said that you think that perhaps the Republican National Convention could have been the peak for the Trump campaign so far. You still feel that way?
There's a version of this where that does be the case, where you have that was the high water mark. The convention, as you said, was where he was on message. Everything was presented. There was no second guessing about the J.D. Vance pick yet. All of that is a point where that could have been, look, the best part they had. The Harris change that has really changed the momentum. A lot of what Senator Vance is saying is landing flat among voters, particularly too when you have his comments being seized on about childless cat ladies and other things. It gets into terrain that really isn't appealing to the voters. They need to swing to their side. That's really the ultimate question, is how do they get back into that on message, reining in some of the things and avoiding the getting into the culture wars they're not going to win on, and avoiding these questions of events like that NABJ yesterday, where you just have the former president falling flat on the audience. And really it creates this cycle. If we know anything he hates being laughed at. And if that keeps up, it really feeds into a vicious cycle.
Quickly now move to the Middle East for me, will you, for a big shift. We've been talking a lot about domestic politics. We've seen the price of oil start to really move up on this new assassination in Iran that's being blamed on Israel. There was another Hamas leader killed last night. Israel's taking credit. Are things really heating up? It does seem that Netanyahu is making I hope it's a final surge, but it seems to be, he certainly increased things while he has the chance before all of a sudden, you have a new president in the White House that could change the ground for him.
Yes, I think this really does represent a sense of escalation. And if there are red lines, it will be interesting to see how the Iranian response comes. Will it be similar to what we had previously this year, where there were the missile and cruise missile attacks on Israel itself that were largely shot down and intercepted? However, this really does derail any kind of sense of negotiation on the hostage front, prolongs the Gaza question for sure. I think Netanyahu really does see that his survival depends on shoring up his support from the right wing until forced to have an election somehow. And that with Iran and Hezbollah and all the other proxies in the region, there is this risk of this escalation going further, and Israel having to face an even greater missile attack than it did earlier. I think where you look at oil prices and some of this, algorithms whipsaw quite a bit on some of this news. However, the issues you have with the Strait of Hormuz, closure of that, I don't think we're near any of those scenarios that really would send oil in a bad direction.
So you think that this is still going to be contained and managed, and you don't see things blowing up in any material way? You don't see an out and out war with Iran?
I see Iran firing their salvo back, and you get back to this, state of tension again. But I don't see there being a continued tit for tat. Now, again, I say that, an Iranian missile lands on an Israeli hospital or school. These are the things in the fog of war you never know about that can send this spiraling out of control. But if the sides play this dangerous game as they have previously, look, this move is escalatory, but I don't think the Iranians would push their counter move too far towards all-out war.
We'll be back next week and follow up on all of this. And I think next week we'll certainly have a vice president pick from the vice president. And haven't gotten to say that in a long time. Vice president pick from the vice president. And we'll talk more about what's going on in Israel, around the world. Wall Street, Washington, and the world here on the FarrCast with Dan Mahaffee. Thank you very much, Dan.
Thank you, Michael.
We're going to be back with Jack Bouroudjian, great friend, great analyst with lots of experience. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We appreciate you listening into the FarrCast this week. And now to introduce this week's special guest, here's your host, Michael Farr.
Welcome back to the FarrCast. Today is August the 1st. Here we are in the third quarter of 2024. The third quarter of 2024. We're looking at 2025 projections. We're looking at earnings. We're watching this big shift that we've seen in July away from the magnificent 6 or 7 stocks in the S&P 500 that were driving everything. If you didn't own them, you weren't moving. All of a sudden, in July, that changed. Will that change and shift keep up? Jim Iuorio says it will. I wonder what my friend Jack Bouroudjian's going to say to us. Jack Bouroudjian is one of the FarrCast fan favorites. He is now, I always have to ask Jack his title because he's involved with about 65 different companies at any one moment in time. His wife can't keep up. I know that, Jack. Is now the chairman of SmartX Data, a data exchange. Jack's also getting involved in a hemp exchange. He is out there on the cutting edge of whatever's happening now. Jim Cramer should have you on the show every night just to tell him what's happening next. Jack, welcome back to the FarrCast.
Thank you, Michael. Always a pleasure.
Always a pleasure. And Jack, I should tell you, everybody, Jack and I are great friends and have been for a long time. And we're the same age. We've been doing this the same amount of time in different areas of the world. So, Jack, give us your take. If you would start out and give us your take on what you heard from Jay Powell and what are you thinking about markets here? You buy them or sell them here at these levels because we still seem awful high.
Well, I think one of the best takes that I heard, and I'll repeat, is the one that our old friend Tyler Matheson actually gave to the world the other day. And he said, he said last meeting, Jay Powell got on the tee box. He said this meeting, he put the tee into the ground and put the ball on the tee. All right. And next meeting, he's going to actually tee off. And that's kind of how I think. I think that's what we're seeing. He's being very deliberate with it for a good reason. There's a reason to think that maybe inflation is not under control yet. Although, I do see signs that it's under control, and we'll talk about that in a little bit. But the real thing that I enjoy about what Jay Powell is doing right now, he's acting like a real Fed chairman should. There's no guessing game. He is laying it out for us. He's telling us that there are going to be very few surprises. In the event that there's an inflation shock, we might see something happen. We might see him slow down. But he's telling us this is the direction that they're going. Now, having said that, that's one of the reasons we're seeing small caps doing what they're doing. They're probably the most sensitive to the interest rate environment than any of the markets. And more importantly, you mentioned the Magnificent Seven and the rotation that's taken place. Remember, each one of these Magnificent Seven stocks in market cap is worth what the entire Russell 2000 is worth. So I guess what I'm saying is it doesn't take much to leave a large footprint. If you're trying to put money to work out of one of these stocks and into the Russell 2000. So is it over yet? I don't think so. I think that rotation is going to take place, and I'm a big believer the Russell leads the way. The small caps seem to always have led the way in these monster rallies, and something is happening underneath the surface here. Michael, I think many of us miscalculated, the velocity of inflation 10 years ago. We thought inflation was going to pick up back when they were debasing currency 10 years ago. Then, we were all caught up with inflation because it became so quick and they told us it was going to be transitory. We were convinced that it was going to keep going. Well, all the rules seem to have just kind of gotten flipped on their heads. And now we're seeing an environment where not only is inflation under control, but we're seeing the interest rate environment now get under control. And hopefully, and this is a big hope, you're going to see regulatory environment around the stock market that continues to foster growth.
Yeah. Well, okay. One of those rules, Jack, would have been the inverted yield curve, which in our lives, you and I were saying earlier, actually you were saying earlier, has been one of those rules that always means recession. We've had a bunch of those other rules. Why doesn't gravity apply anymore?
Yeah, something's happened, Michael. I think whether it's Fed intervention, whether it is, but something happened primarily after the great financial crisis that changed the dynamic of what we see and what we were taught throughout all the years and how it affected the stock market. Remember, not only the bond market, but stocks, and what we're seeing, and we're probably going to see it play into the next election, is a series of presidents that have been not friendly to the dollar. And let me qualify that. We have seen nothing but currency debasement for the last 12 years. And when people tell me about their portfolios, they're like, "Oh, I'm making a lot of money." But I go, "Yeah, but you realize that the money isn't worth as much anymore."
Right.
Look at gold. Gold is telling you that. So for me, it's a question of the health of the market. And that's really what this next election is probably going to tell us.
I was looking at a stat the other day that said upper middle class families now can make 236,000 or 243,000, something like that. Middle class families making close to $250,000 a year. That was stunning to me, Jack. I mean, stunning. You're making close to $250,000 a year as a family and you're middle class. That was something you and I would have never believed 30 years ago, because it wasn't true, or that it would become true. But what it tells you is people will tell you, I've listened to a couple of folks talking about going to the grocery. I walked into the grocery and I spent $150. I can't go into the grocery store anymore without spending $150. And I mean on just a bag or two of groceries. Well, I'm not doing the week shopping for $150. This is a new world here, but when I look at still those old touchstones to say, all right, this inverted yield curve, when these sorts of things happen, you do get a recession. I'm hearing other folks our age who sound a little bitter saying, you could still have it. I think we're going to still have it. I think we're seeing the beginnings of it now. This is what Jay Powell and the Fed are reacting to. The employment data, we had some out this morning from ADP. We'll see the big jobs number tomorrow, Jack. You think we're seeing the beginning, perhaps, of an economic contraction, or are we going to see this soft landing? Where's your bet?
I'm starting to think it's a soft landing, Michael. It's starting to feel that way. The 10-year bond is telling me that. If the 10-year bond were higher than where it is right now, if we started to see concern, especially in the market there, what I am concerned about is the real estate market. I see a lot of things that, like there are three legs to the real estate market when you think about it: new home sales, existing home sales, and commercial real estate. 2 of the 3 of those are in trouble. And so we have to keep a real close eye on that. We have to keep an eye on these regional banks. But, look, there are always going to be concerns, but we're noticing those concerns. They're not black swans. because
Right.
we see them. See, so that's important. What we don't see is something that comes out of left field, a war, something to that effect. But remember, the politicians that we're dealing with now, Michael, and this is very important for listeners to understand, have now convinced themselves and convinced everybody that inflating their way out of problems is the way to go.
Yes.
And if that's the case, then people have to stay invested. You have to have exposure to assets, whether they be hard assets, whether they be stocks, and it's almost, counterintuitive, but you almost have to have all your money exposed in an environment where they're debasing the currency. Yeah. So, that's really the situation that I think that we're starting to enter, especially with these high levels of debt and these high levels of servicing that debt. We saw it happen between the 30s and 50s, Michael. I hate to be a history teacher, but soybeans were 33 cents a bushel in 1933. They were $4.50 a bushel in 1954. And the reason was because they inflated their way out of World War II. They inflated their way out of a depression. And they were convinced that that was the way to go. And that seems to be the path that we've taken now. And the only people that really understand that and are making money are the people that have money. Stanley Druckenmiller came out and said that the other day. We're the only ones making money in this environment because we're the only ones who know how to make it and see it. So, and fortunately, there are people that are our age that are running people's monies, all right, that are giving them that type of insight. Because, I know a lot of people that are our age that are in cash because they're worried that the market, and I'm thinking to myself, you're nuts. You're nuts. Yes. My poor mother-in-law, 82 years old, she asked me to take a look at her 401k because my father-in-law passed away. I mean, there's a lot of money. It's all money markets. I said, no, Mom, you've got to get this exposed. Inflation and debasement will kill you. You can't do it this way. So, I sat with her and we figured out a very smart way to be able to just approach that because, she's only got a couple of years left. But it bothers me that there are still people out there that think that they are money managers because they read a book.
Yes.
It's like me reading a book on medicine and thinking I'm a doctor,
Right.
And I'm like, would you go to a professional, please? You know what? You have lost 5 years of a rally here because you were convinced that Biden was going to take you down instead of saying, wait a second, they're going to keep spending the money. This stuff's going to keep going up. You know what I mean? As long as they keep printing money at 8% a year, we're going to keep seeing these markets go higher and higher and higher. So
there's no question, and there are two sides to that particular sword that cut. You've got the folks with assets who are going to see those assets appreciate just by virtue of inflation.
Yeah.
But you also see, and this is a really hard concept to get, ladies and gentlemen, I get it. But when you see inflation, it means that the consequence of debt gets reduced. Debt, the value of the debt gets reduced, okay, for the borrower. So if you have a mortgage and you see the value of your stock account going up, right? You've got $500,000 in your stock account and it's going up by virtue of inflation. It's being inflated higher. The value of your debt is actually falling relative to inflation. It takes more dollars to do the same things, and therefore your debt doesn't matter as much. Let me say it a different way. If all of a sudden we had 100% inflation and gasoline went from $4 a gallon to $8 a gallon, and you were making twice as much money as you're making right now. Think about that. Think that you're going to make twice as much money next year. Say you make $200,000 a year, and now next year you're going to make $400,000. You suddenly don't care as much about your $250,000 mortgage, do you? It's not as big a deal. That's the whole point of inflating your way out of debt. The problem with the U.S. right now, as Jack and I will tell you, and we will scream and wail from the treetops, is that we keep adding to the damn thing, and we're adding to it faster than we're growing. We're adding to the debt. It's one thing if you inflate a fixed amount of debt, but if you keep adding to it, you can't stay ahead of the burn. Did I say that right, Jack?
No, you said it precisely. And Michael, remember, look, the reality is that we see it happening. It's intentional. Jimmy Iuorio is the best at that. He's been talking about it for years. You know what? He's been saying that the inflation has been intentional. The one good thing, though, and I'll point this out, is the volatility we're starting to see on the way back down. Remember, not every surplus is followed by a shortage. But every shortage is usually followed by a surplus. That's one of those rules that you learn in economics. And we're starting to see that right now, whether it be in new home sales, whether it be in car sales, whether it be in commodities. We now have soybeans now cracking $10 a bushel. We have corn as low as it's been in a long time, lumber as it's been a long time, copper. Now that's important because these are indicators of where we might see inflation in another 3 or 6 months. And more importantly, it's something that the Fed pays very close attention to. And we pay close attention to because it's what we pay for when we go to the grocery store. If that volatility continues on the way down, we see that this inflationary pressure hold, then I think we're going to start seeing Americans continue to hold their purchasing power parity. That's the problem. They're not holding their purchasing power parity as we see this debasement take place. And that is the biggest concern, and people don't understand that. And you're right. Spending is gotten out of control. Entitlements have gotten out of control. But here's the problem. Neither one of these candidates is what I would call a dollar-friendly candidate.
No.
They both want it, and that's the problem. So what are you doing in that environment? You stay invested. You stay exposed. But more importantly, I think that what we're seeing is probably the next leg up about to take place. And people have got to be prepared for it. Look, if we end up with a Republican administration, we're talking about deregulation. We're talking about, lower taxes. We're talking about a tax-friendly, business-friendly environment. It doesn't mean it's a dollar-friendly environment. It's a business-friendly environment, which is good. If we don't see that happen, we're talking about people that are just going to debase the currency, which in which case you've got to be invested. So it's almost like a win-win if you're in the stock market and you've got exposure. What the worst case scenario would be if we ended up like 1990s Japan. If we ended up in a deflationary spiral, because that's one thing. Look, inflation, central bankers can take care of. They can whip it. All right. Whip inflation now. Remember those buttons?
Sure. When?
Deflation, they can't.
Right.
Deflation is something that keeps them up at nights. So disinflationary pressure is good. Deflation is bad. And that is probably the worst case scenario.
Might have been one of the funniest jokes George Bush 41 ever made. Wilbur Mills had a little bit of problems way back when in the 80s. And there were win buttons for whip inflation now. And he said that they stood for Wilbur is naughty. Which I thought that was really. He said it in front of a microphone too, which was pretty good of the former president. So, from Jack Bouroudjian, we're hearing owning stocks and other assets. Stay invested. Jack's been prescient, I promise, over the years of all the folks I listen to. When I get to talk to Bouroudjian, and ladies and gentlemen, you do this long enough, and Jack and I are getting close to 40 years of this. He might already be at 40 years of this. Yeah. And the other folks, I get to talk to Jim Iuorio, who's been doing this for 30 or 40 years. You listen to the people who continue to say things that make a lot of sense, who over the years have the scars to show for their mistakes. And they don't just sound smart. They do sound smart, but that's not it. You can find a lot of folks without experience who sound smart, and they might be right. But when these guys say, look up and kind of take a deep breath and say, actually, I've seen this before, and you've seen it before too. Do you remember this? And I'll look up and say, actually, yeah, I had forgotten about that, and I do remember that. And yes, it does seem similar. This is how having this network of confrères can really help the investment process. And it's what I try to share with all of you on the FarrCast, bringing these folks and their expertise and their experience, their great experience. Jack, thank you so much for being with us again on the FarrCast. I mean, truly, I always learn so much, and I love talking to you all the time anyway. Thank you.
My pleasure, Michael, anytime. You know that.
That's it for another FarrCast, ladies and gentlemen, as we cover Wall Street, Washington, and the world. I know we ran long, but I was just too interested in hearing what everybody had to say. Meta reported, we had the Fed comments yesterday. Futures are up slightly this morning, but they don't seem to be taking off in any huge way, fractions of a point. So interesting that we're not seeing some huge runaway market this morning after we had big markets yesterday. Stay tuned, stay nimble, but stick to your investment philosophy. Remember what I said at the beginning. The most important thing you need to pay attention to is that the Federal Reserve is pivoting. They're going from tightening and a restrictive policy to a policy of accommodation. And I don't care how long it takes. If that's what the Fed's doing, that's the way Farr is going to think about his investments. The political scene be damned. Pay attention to the Federal Reserve. They're shifting. That's big, and it's good for stocks. And so listen to Bouroudjian, too, because, he says we're inflationary. I'll be back next week. Thanks so much. Share us on social media. And I love the comments we got from last week from Senator Nichols and everybody else. Bye, everybody. I thank you so much.
Thanks for joining us this week on the FarrCast. We hope you enjoy the show as much as we enjoy making it for you. And thanks to our guest, Jim Iuorio, Dan Mahaffee, and special guest, Jack Bouroudjian. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Stream past episodes and subscribe so you never miss a new one. Please be aware that any time we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And, as always, if we can be of assistance at Farr, Miller & Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'm happy to arrange for any of our listeners an appointment with one of our financial professionals to review your portfolio, your needs, and your goals. We love reading all of your notes, and we try to reply to as many as we can. You can reach us at hjennings@farrmiller.com. Let us know any questions you have about past episodes or questions you'd like us to address in upcoming shows. Take care, stay safe, and stay healthy. And thanks for listening to the FarrCast. Wall Street, Washington, and the world. Farr, Miller & Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and SEC registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr, Miller & Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr, Miller & Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr, Miller & Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr, Miller & Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.